Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for the day. It is Thursday, April 3rd. Please give me a like, give me a subscribe. Really helps out the channel. Could get it in front of some more eyeballs just by liking it. All right, did you do that? Thank you so much. As a thank you, here's a very cute squirrel. Yeah, that's a cute squirrel. All right, let's dive into the charts. They come in waves. It comes in waves. All right. Let me turn that down. All right. What are we looking at? Well, Trump started talking, pumped the market up, got real high, got real good. It was like, oh man, might actually do something. Nope. Bounced right off the 200 here on the 6-hour chart. We'll come back to that later. Came right back down. Rip roaring its way back down to basically where we were at on the 31st. So, yeah. 3 days of trading. Wiped away. Let's just clear all this out because that bear flag is gone now. There is there's a bear flag over here now. Hold on. There we are. It's here. So it started up here. We can either take the wick or not take the wick. I don't think I would take the wick here, but let's just go from it. There we are. We won't take the wick. That would be the pole for the bear flag. This would have been the bear flag before, but it's kind of changed now. So we'll kind of widen that up a little bit here. Beep, beep, like that. Top of the bear flag is here for now. And if that were to, play out, like I said, it should have been from here, and then it's playing out now. This other thing kind of just looks meh. That would have been the bear flag. It would have played out from there, and we have a measured move down to 78.6. Move it over to the breakout point. Still around 79. We'll just say 79. So is this move coming down to 79? Possibly. Quite possibly. Could it fall short? It could definitely fall short. Do we see anything that's telling us that it might fall short? Well, let's see. Stokes are way oversold. Zero, showing a 0 for the Stoke, and a little higher for the signal, but the signal's also in oversold territory. However, RSI not in oversold territory, but RSI is showing a bit of divergence. Well, possible divergence. This low here, this bottom here on the RSI could, move down some more. There is still an hour and 18 minutes left in this chart, or in this candle. And if it does move down lower than this low, which is down here at around 28, we'll say, if it gets lower than 28 on the RSI there, then this divergence will be gone. But as of right now, here is a bullish divergence on the RSI. Are there any bearish divs to look for? No. Okay. So the bullish div there, and just put this there and this there. So yeah, clearly see it's only slightly lower, but it's still lower on price action, while the RSI is showing slightly higher highs. So yeah, that's a divergence. Possibly going to catch us here. Hopefully it does. Hopefully we don't go a little further and strengthen this divergence. But look, the RSI is actually starting to curl a little bit. If we can get over that signal line, that yellow line on RSI, that'd be great. We could start pushing back up into the bullish territory, as we were here while we were moving up. But while we're in bearish territory, we're going to be moving down. That's kind of what happens. You can see that's what happens. Bearish territory, that's under the 50. Here's the 50. Under it is bearish, over it's bullish. Right now we're bearish, but it looks like it's curling and might want to move to the upside. Hey, look, the Stokes have bounced off the 0 marker, possibly starting their move, their oscillation back to the top side, which will take RSI a little higher. We want to see a higher high over 47, back into bullish territory. That would be great. Okay, let's take a look at the 22 just to say, hey, where are you taking the 90? Same deal here. You see the RSI starting to curl. If it can get over, we're seeing a bullish div here too. We are seeing a bullish div right here. Higher lows, lower high, or lower lows on price action, higher lows on RSI. This one's actually printed too because this started to curl back up. Although this, if this candle starts coming down, then the line will start going back down as well. So we got 10 minutes to see if this candle can actually close here with a little bit of green and put into a bottom there, which would be the divergence. All right, that would be good. A little divergence saying, hey, 82 may hold. You may get back up over it, and it may hold as support. Let's look at the 5. Got divergence, bullish div on the 5 as well. Higher lows here on RSI, lower lows on the price action. Stochastics pointing to the upside, starting their oscillation up. This may be a bouncy point. This could be a bouncing point. And kind of hope it is, because, you know, if we do see a bounce here off of 82, roughly, well, then we're looking at, let's take a look at the 1 as well. We're under the 200 on all of these lower time frames still, but we need a 1's breaking, RSI is breaking into bullish territory. We've seen a double bottom here on the 1. That should bring it price action back up at least to that 81,940 level, possibly all the way back up to 82.3-ish. Let's see what happens. We are seeing overbought on the Stokes here, though, so a little bit of sideways movement or a little downside while the Stokes reset is in order. Hopefully the RSI stays over the 50. Otherwise, we'll see some more downside, but we could see the bounce off the signal line, and then this is a bull flag, a small one on the 1 minute. That could drive it all the way up to that 82 again and possibly higher. But yeah, under the 200 here on the 1, that's bearish. On the 5 and on the 22, and we're back under it on the 90, and we're under it on the 6, and we're back under it here on the daily as well. So yeah, we're back under the 200, so we got to be a little more bearish than bullish still, but man, on the shorter term. On the longer term, we're still pensively bullish, but on the shorter term, we got to be a little more bearish and say if 82, if we can't get back over 82, then a move back down to our March lows here at 77 is probably on the table. It gets more likely, and if we get that low and we break under, it's under those March lows, well, that would invalidate this bull flag. That would signal to us that we're well on our way of completing this bear flag, at least down to that next level of 72. And the sky's falling down at that point. I mean, we may have a bounce, but at that point, we're in the bear market. So let's see if 82 can hold. I really hope it does. I hope it puts in this a double bottom here. If it can find a bottom here, well, then it would put in a 1 and then a 2, and then that would bring it back up to where it came from, which is up here around 87.5. But you could also take a measured move of a double bottom by stretching it from the bottom of the head up to the shoulder line, and that would bring us a move up to about 93.758, right up to that 94 support or resistance now. Hey, I would love to see it. If we can get up there, that would invalidate this bear flag and take a little bit of bearish worry off of our heads. But at the moment, like I said, we're back under all these 200s on the lower scales, and failed to break over it here on the 6-hour chart. So let's see if this double bottom can be our saving grace. But we are under 82. We're not over it. We're under it. Oh, boy. Oh, boy. I really don't want to see 77 again, but looks like it's on the table, boys. Looks like it's on the table. Good chance that there's a reversal from here, but 77's on the table. All right. Much love to y'all. Thank you so much for watching. I'll see you later.